See, we've got a serious supply chain snag that's pushing up prices all over the place, and incredibly strong demand fueled by a government still anxious to put money in people's pockets. But if the free market can correct itself, and it is the free market, then I think productivity increases will be able to trump price increases, which will allow the Federal Reserve to keep holding interest rates low and allow stocks to go higher. Right now, we're seeing this debate play out among some of the most powerful people in the world. Jack Dorsey, the CEO of Square and Twitter, which, by the way, reported better than expected quarter this very evening, believes that we're in an inexorable path to hyperinflation, where dollars become worthless while other storeholders of wealth retain their value. In his case, he thinks crypto will do it. Whenever you hear people using the term hyperinflation, by the way, unless they're talking about Weimar Germany or Zimbabwe or Argentina, what they really mean is high inflation. Hyperinflation is hyperbole. And it's high inflation. That's what they're really worried about. That we'll get high inflation and the Fed will have to obliterate the economy in order to get prices under control, a la 1980 and 1982 in this country. At the same time, you've got another camp that's really polar opposite. That's personified by Cathie Wood. She's that visionary fund manager who was Tesla's biggest backer for years as it grew from a tiny, struggling automaker into a trillion-dollar enterprise. Rather than inflation, Wood believes we're headed for deflation because of a huge inventory buildup as well as the power of technology to keep a lid on prices. She's very wary. The last time she thought inflation would take off, and she was wrong. I like your humility there. To me, this whole debate is just too ethereal, with both extremes being, well, too extreme. I think it's a mistake to focus on those big macro numbers. Instead, I want to wrestle with the inflation versus deflation debate by looking at what's happening with individual companies and their stocks, which is much more concrete and, more important, can help make you a lot of money.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.